Okay, folks, welcome to Best Stock Charts for December the 7th. There are two things that I love about this business more so than anything else, and that's one is I love to speculate. I love speculation as much as I love getting up in the morning. Two, and just as equivalent, and truly it helps finance my speculation, is the ability to identify trends before they begin to break out, meaning a stock, commodity, ETF that has been in a long-term downtrend yet is beginning to show signs of life. And case in point was this time last year when we were building a position back here on NUGT as it consolidated and as it began to break out, we were long. And we were long when Goldman Sachs was downgrading gold after they had just upgraded it, but then they went ahead and downgraded it, and we stayed long, and this made our year. Our year was complete, and this is what I mean by our early breakout stocks financing our speculation, because that is truly the bread and butter of what we do here. And gold did fantastic up and through the Brexit vote, and we've since pulled back. I'm still very constructive on gold and the gold mining names, and we have been adding to our mining names, but the week in and of itself hasn't been all that great. It's been a great bull run, but frankly, the need to look at my whiteboard has been necessary. And what I have on my whiteboard, which is right next to my desk and right over my trading terminal, are these words. Are you hoping when you should fear? Think about that. Are you hoping when you should fear? And if the answer is yes, then default to, are you worried about your capital reserves? And if the answer is yes, well, then the next question by default is, are you focusing enough on your capital reserves? And it's essential in this business to make first and foremost the preservation of your capital reserves, or you will not be able to trade as you like. I would not be able to finance next year's 2017 breakout plays in the early stages. I would not be able to finance what I believe to be a serious correction in the banks in certain sectors in the coming weeks, especially transports, which broke out today. So it's critical that we focus on trimming back on what's not working, reevaluating our positions, and then focusing on the coming months. So the stocks I'm going to go over tonight are stocks that we've sometimes traded throughout the year, stocks that we have book profits on, such as NUGT. I still carry a position. We loaded up more earlier in the week, and now we're focusing on adding more. And this is a monthly chart. And this is what we'll be looking at as we proceed into 2017 is, how do we look? Really, how do we look? Where do we stand? And on the downtrend channel, which we are definitely in here, on NUGT, we are trading at the lower band of the declining downtrend channel. I'm very, very bullish. We scaled out on two separate occasions, once up here, then again down here. And we've traded it a couple of times in between. Now we're looking to reload on our position because we believe that 2017 is going to be another banner year for gold, the gold mining names, etc. What else are we watching? We're watching TZA, and frankly, I was stopped out of the TZA, which puts you 3 times short of the Russell 2000. We bought it back here. It rallied, and I put a stop loss in right below $20.75. And I mentioned on the weekend's best stock charts, you can go back and check it out, that if we had rallied on Monday of this week, I was going to book profits and wait for the pullback and see whether or not the support level held. The shares pulled back, broke support, first out, best out. We moved to the sidelines. Now we're looking for another base on the TZA. Then we'll look to get back in. Next chart up, APA, Apache Corp. Now energy is beginning to look better. We have Apache, which is in a consolidation, a pennant formation. It flashed a reversal day today. I think that Apache is very close to breaking out. It rallies strong today on rising volume. This is a buy that I'm looking to put on fairly soon. Next stock up, FSLR. If the price of oil is rising, many people believe that you should avoid the solar names and the other renewable resource names. Nothing can be further from the truth. We need to be looking now at FSLR, because if oil is truly beginning to break out, and there is a question mark next to that, if oil is truly beginning to break out, well then, we need to look at FSLR. And guess what? It has hardly budged relative to the rest of the market. Now, at current, we're at resistance. We're watching this one for a breakout. Now, speaking of oil, we're watching UWTI. Is oil in the early stages of a rebound? Maybe. That's the best I can give you right now, because right now, on a weekly basis, we are in a pennant formation. We attempted a breakout. The breakout has been repulsed, and we have backed down off of this breakout point. Now, if we're talking this time next week or the next couple of weeks of UWTI trading out and above of this megaphone formation, meaning it's been putting in lower highs and lower lows, well then we could start talking about buying the shares of UWTI. But what must happen? We need to see the dollar break. The only reason why the dollar would break anytime soon is because the Federal Reserve indicates that they will be offering more quantitative easing, and that's going to happen fairly soon. They won't say it directly, but it'll be implied in their forward-looking statement at the next meeting. So UWTI looking interesting. Now, if the dollar pulls back, what else should do well? We're looking at BRZU. We traded it up to here back in October. We booked profits. The shares fell apart. We booked our profits, moved to the sidelines. Now we're looking to get back in. It was trading down below its 200-period moving average. Now what you're seeing here is a double bottom setup, a W formation. If the dollar continues to correct, we can look to get involved with the BRZU. However, if the dollar rallies, well then we're going to have to avoid the BRZU. What else is looking good for 2017? VGK, the Vanguard FTSE Europe Fund. We are in a huge pennant formation. The chart you're looking at is a monthly chart, and we quite possibly could be breaking out in 2017. We have a beautiful set of bottoming tails here at the $42 level. We have rallied, we're pulling back, we're putting in a higher low. Now we're looking for a breakout. And it may not be the VGTI trade, but it will probably be, if there's a leveraged ETF out there that puts you 3 times long, I'll probably be trading that vehicle. Now, in the meantime, we have a market that is in fuego. No doubt about it. Now, if the banks pull back and the transports pull back next week, we're going to be looking for other names to trade. One name in particular is Caterpillar. I haven't spoken bullish about Caterpillar in quite some time. And now the shares are really beginning to break out. We're at 97.33. The probability is that we are clearing $100 per share very, very soon. So Caterpillar on our watch list to get long of. Now, when the banks and the transports begin to pull back in earnest once again, which is going to happen soon, we'll be looking at the former names that were the leaders of 2016 up until a couple of months ago. Amazon, good for a rally into Christmas. We have a double bottom setup and a higher low. It looks like we want to rally. Do I believe that the rally is going to last into 2017? Probably not. The shares on a weekly basis are holding support, but that momentum that they once had is gone. Could they come back? Sure. But I think that we do have a rally, and it's probably going to be a short-term swing trade, and we will book profits, move to the sideline. What else? Apple. I called it back here. Back in October, this hollow candlestick flashed the top in the shares. We pulled back, put in a low of 113.22, rallied back, and then we began to break down. We have since rallied off the lows. We put in a higher low. I think Apple is going to rally. The question is, do we put in a lower high? And if we do put in a lower high, the probability going into 2017 that Apple has seen a top is very, very good. But right now, we're looking to buy Apple into the new year. Facebook, same story as what we saw with Apple. It rallied into earnings, and then failed. It broke down. Now we have a double bottom setup, and we may just rally into the new year as the banks and the transports take a breather as we move into Christmas. And why do I think they're going to take a breather? It's because we have the Fed meeting coming up soon. The probability of the Fed meeting being a catalyst to send those shares lower, because I do believe that they are going to speak dovish, forward-looking. That will be weak for the dollar. That'll certainly be weak for the banks. And it may just cause traders to ask the question, what does the Federal Reserve know about this economy that we don't know? And that may send the transports lower. What will people turn to? They'll turn to the FANG stocks, Facebook, Amazon, Netflix, and Google, some of which we've already gone over. Or if they all begin to break down, go back to the TZA, and we'll be trading that to the long side. So that's it for the best stock charts for this evening. Members, let's roll into market wrap. And we'll begin the market wrap off with the 10-year yield. This is a weekly chart. Inside week this week, yet isn't the Federal Reserve supposed to raise rates and become very, very hawkish into 2017? Things that make you go, huh?